Welcome to another product knowledge video. Today's video is on title agents, errors and omissions insurance. Let me tell you a little bit about the presenter right here. His name, I'll get his picture up here just a second. There we go. That's John Torvey, and he is our most prolific speaker and teacher and presenter of specialty coverages. He has done cyber liability, real estate, accountants. He has quite a number of them, and he's an expert on it. And he will be recommending or answering any questions, whatever, of our agencies or of the agency sponsoring this today, and be for you. He's the Vice President of Marketing of Landy, and Landy is well, I would say MGA, a managing general agent or program managers. They do a lot of that, but it's on that level. And then, of course, the agency, sponsoring agency, deals directly with them. So, John, let's talk about what is title agents, errors and omissions insurance.
All right. Well, thank you, George. Thanks for having me on again, and hello, everyone. Well, title agents, errors and omissions insurance is very much a specialty product, and it's there, as is all types of E&O and professional liability insurance, to protect the firm and those working on behalf of the firm from allegations of error, omission, or other type of breach of duties from a malpractice insurance claim. With title agents, it's a pretty broad topic. They're integrally involved in all real estate transactions, and they're very much a target for E&O type of claims.
It's quite a broad coverage situation, isn't it? I'm very interested in it. I bet they really have now. Go ahead.
No, sorry, I'm sorry, George.
Well, I'm just saying that
the category itself is pretty broad. I mean, it encompasses a lot of professional tasks. So, there's a lot of opportunity for things to go wrong or alleged to have gone wrong. And some of the claims that we see are very much, kind of down and dirty type claims. We see a high majority of claims related to property easements and boundaries, where the title agent is alleged to have provided misinformation on the actual boundary of the property, for example. And that can even include things like where the neighbor's fence is, for example, or where the neighbor's driveway is. A lot of claims and issues related to rights of way, whether that's on commercial properties or residential properties. So easements, boundaries, rights of way issues are very, very dominant as claims go. There are errors in calculations related to figuring out payoff figures, loan amounts, those types of things that have to do with the information that's going into the final closing process. We see claims related to rejection of the titles by the lender because the lender feels that the title itself is in defect, and that goes back to the title agent. One of the other big categories, George, is undisclosed or undiscovered liens on the property, and that could include things like a hidden mortgage or an undisclosed mortgage. It could be a failure to accurately identify a lien. We see one recently, for example, where the title agent identified the lien as a lien from a commercial mortgage lender. It was actually from a private party that threw up the title and caused the delay in the closing. And one of the other...
Yeah, go ahead.
I'm sorry, go right ahead, George.
Well, I was thinking about this as you were talking. When we talked before, you told me the title agent can be a title agent or an escrow agent or an abstract or examiner, a closing agent, a signing agent. There's a lot of different ones for this, isn't it? That was before when we talked before. I was just thinking about there's a broad. It's just not a title agent. There's a lot more than that, isn't it?
It's very true. And different states may even call the same function by a different name, for example, according to whatever licensing requirements exist in that state. So a closing service could also be called a title agent somewhere else. It could be an actual attorney. There are title examiners, which is very similar to the abstractor. What's not on this list here is the escrow agent, who's responsible for collecting the deposit monies, for example, safeguarding them and making sure that they're accurately available at the time of closing. So the broad category of title agent actually can encompass quite a few different professional responsibilities.
Okay, good. Well, let's talk about the coverage needs and the coverage availability.
Sure. Title agent programs are typically available through an appointed broker or a managing general agent. There are not that many direct access types of title agent programs available, so it is important that a retail agent, for example, helps their client by contacting a broker who's appointed with a carrier or carriers or through an MGA who's administering a program. Title agent E&O insurance is typically non-admitted. I don't think that there's any admitted coverage out there for title agents E&O. I hate to make a categorical statement like that, but I'm not aware of any. So there's typically non-admitted coverage available, which poses its own issues, which we'll talk about in a moment.
Okay.
It's important to understand what the carrier appetites are. For example, some carriers won't offer coverage to 100% escrow firms. They feel that there's too much of a risk there. In that list that we were looking at earlier of what can go wrong, escrow disputes rank high on the list of claims that we see because of the emotional nature and of the money involved and how important that is for accuracy at the time of closing. So escrow firms, actually do pose a different type of underwriting risk than, say, an abstractor or a closing agent.
Okay.
Minimum premiums are typically in the $1,000 to $1,500 range. Quite honestly, we seldom see a minimum premium, even with a one-person type of operation. But I think that the agents need to help their clients understand that minimum premium is going to be at least in that $1,000 to $1,500 range, and that doesn't count surplus lines, taxes, and filing fees. Some programs do require memberships or membership dues. That's not necessarily a detriment. There are really good programs that have relationships with national title associations, for example. Very good coverages, very competitive coverages and pricing. So the membership is not necessarily, shouldn't be seen as a handicap. And in fact, I would say that many of the clients who are applying for coverage may already be a member of such an organization. So the agent will want to ask their client if they're a member of a national title organization or professional association.
Okay.
But again, some of those programs do require memberships or dues. So there's an extra level of awareness and paperwork that could be necessary with that type of arrangement.
All right.
Okay. There's some other considerations, George, for agents, and I mentioned the surplus lines issue. If the retail agent is not licensed as a surplus lines agent in the state that they're trying to place business, that could be an issue. Typically, the MGA or the managing broker may be surplus lines, and they'll do the filing for them, for the retail agent, including all of the paperwork and the payment of the taxes to the state and so on and so forth. But the retail broker should be aware that there are surplus lines forms that will need to be completed. Some states require that the surplus lines forms be actually signed and completed by the client themselves. So awareness of the surplus lines tax issues is very important.
Let me ask you something about that. Just excuse me for interrupting,
Sure.
but we we say non-admitted, we say surplus lines tax. Can you describe the difference between non-admitted and admitted just briefly? I know it's a curve I'm throwing you, but uh,
Sure.
yeah, I think a lot of people
Absolutely.
won't know. Okay.
Admitted coverage is coverage that is filed in a particular state and approved by the state's insurance business regulation or insurance commissioner, and it is protected under the state's insurance guarantee fund, which, you know, I'm not sure what that's worth, but that's important. Admitted coverage has a lot more scrutiny in terms of how the approval process takes place, but it also has certain limitations in underwriting. For example, if a maximum credit available for a certain underwriting class is 25%, that's the maximum you can give. Or if you're filed to underwrite a certain type of risk, then that's what you can do. There's not a lot of flexibility. With non-admitted coverage, while it still has to be filed with the state insurance commissioner, it doesn't have the protection of the state insurance guarantee fund. The surplus lines programs, non-admitted programs, typically have a lot more flexibility in underwriting. In other words, there's a lot more flexibility with credits. It's easier to add manuscript endorsements. It's easier to underwrite certain types of risks. And the plus and minus for the client and for the agent is that, A, as I just mentioned, there's a lot more flexibility, but B, it also allows the insurance carrier or the underwriter themselves to really take a better look at maybe a risk that's not so great. So an admitted program is typically looking for your top tier, no claims type client. A non-admitted product is available to accept a broader range of underwriting risks, including your not-so-good clients. And typically, you know, they're going to pay a lot more on the non-admitted side.
Thank you. That's very good. I hope a lot of people will listen to. Hope a lot of staff people of the agencies also listen to that in addition to the prospect. Go ahead.
Sure. There are programs offered by the large national title insurers, the Old Republic titles and so on. You know, they tend to be good programs. A lot of them are bundled type of programs where there may be a fidelity bond included, maybe cybercrime included. Your client may or may not need all of that coverage. They are worth looking at. Typically, they're not available to a retail agent. They're more client direct type of programs. If you see a client with one of these types of programs or they're being offered that, you know, it's really important to try to scrutinize those, the coverages. We find that quite often it's possible to replicate or improve those programs with both coverage and pricing. So they're worth picking apart. And again, the other advantage, I think, is that you're not sharing limits under one program. For example, if there's an E&O claim and a cyber claim, you're not sharing limits there. You have separate policies for each categories. But they're out there. They're good programs, but they're worth taking a hard look at if your client is presented with one or is carrying one now.
Okay.
I mentioned the filing of surplus lines taxes, programs offered by National Titles Insurance. The other thing is retention. We find that retention on title agents is not that great. I think that's pretty much across the board. I think it has to do with title agents being typically a lot of smaller size family businesses, mom and pop style businesses, and those come and go a lot quicker than your larger businesses. So retention could be an issue for those looking at writing title insurance. The big threat, the newest threat, of course, everybody is hopefully aware, is just the cybercrime and computer fraud. We need to recognize that there's very little to no coverage for cybercrime and computer fraud under Arizona Omissions insurance. Escrow agents particularly are at a very high risk of computer fraud, the wire fraud, the social engineering where those escrow funds are misappropriated and stolen basically by the cyber criminals and sent off. So anyone who's working with title agents, and especially anyone doing escrow, the agent really needs to address the cybercrime issue, not only on behalf of the client, but frankly, their own professional risk. Because I think if they're not talking about cybercrime and recommending cybercrime insurance to their title agent and escrow agent clients, they're really at a risk of malpractice themselves.
Yeah, it's crazy these days, isn't it? I'm just, you can't open the paper without seeing another one. Oh, brother.
It's true. And the last thing here, George, in terms of considerations, is that many real estate attorneys also act as title agents.
Mm-hmm.
And in some states, in fact, the law requires that an attorney attends the closing and is the closing agent. In some states, it can just be a licensed title agent. It can even be a notary public. Some states, such as the state where Landy is in Massachusetts, require an attorney to sign the closing documents. So a lot of attorneys act as title agents. If anyone is writing lawyers' professional liability insurance, in addition to title agency, some LPL carriers will include title agent as a professional service automatically. Some may add it on by endorsement. Some will exclude title agent services. And many attorneys also have their law practice under one entity, and then they have a title agency under another entity, another LLC or another S Corp, for example. Again, the retail agent really needs to sort that out. There are carriers that will endorse on the title agent LLC onto the lawyer's professional policy with no additional premium or a small premium. Some will not. And frankly, you have to look at each individual case to see, is it to the law firms and the title agents benefit to be on one policy, or should they be on two separate policies? It could have to do with the size of one versus the size of the other, multi-state action services versus services in one state. So there's a lot of things that the retail agent should look at here when working with attorneys who are acting as title agents, and especially if they have a separate title agent company. Again, it's coverage is available. It's not that it's not available. It's just really sorting it out and making sure it's done properly on behalf of the client.
John, the conclusion I make during all of this, once again, all the complexities of this is really, this is more than the average agent can understand. And that's why I always like to mention to people that that's why the agency that's sponsoring this, and any agency for anything, deals with the people like John, because that's what they do all the time. There are so many complex coverages these days, and it gets more and more complex as the computers or as communications grows. It's just amazing how much how valuable it is to have a real professional who understands this. So I want to thank you for that. And let me suggest to you who are listening and watching, for more information, go to Contact Me link at the end of this, and it'll take you a minute. It takes you pre-addressed. It goes right back to the agency again. The agency will call John, or part of that, or one of his henchmen there, to do it. That's the way this works, because I just want our listeners to know that professional firms, professional people like John are absolutely essential in this day and age, and I'm so pleased that you've been able to do this for us, John. So I want to thank you again for everything. Keep them coming, will you? Okay.
Thank you. Thanks for having us, and we're always available for help.
I know you are. Thank you.